What's going on, fellow retail investors? Welcome back to another Boss Blunt's Think Tank. We have to have an emergency meeting based on AMC call contracts and options. We need to have a discussion here in regards to the strike price of the call contracts. Make sure you're muted. 1909, mute yourself. Awake space, mute yourself, please. Lord Meme, thank you very much. What's going on, people? Thanks for joining in here on YouTube. We're going to do this live on YouTube and in the think tank at the same time, and I will explain why. It appears as if the broker-dealers are not aware of how the options are supposed to be broken down. And I had somebody who will remain nameless message me this. He contacted AMC about his AMC1 and AMC2 call contract. I'm sorry, he didn't contact AMC. He contacted Fidelity, the broker-dealer, obviously, about AMC1 and AMC2 call contracts. Now, for those of you that are unaware, AMC1, prior to the reverse split of the conversion, would give you, when you exercise, 100 shares of AMC and 100 shares of APE, AMC Preferred Equity, for a total of 200 shares. After the conversion to reverse split, you were supposed to get 10 shares of AMC and 10 shares of APE. So that's 20, obviously, for AMC1, which makes sense because it was a 1-to-10 reverse split. Instead of getting 200 shares, you'd get 20. Because of the, now this is where it gets a little complicated, but bear with me here. Because of Thank you. My daughter just came to tell me I was muted. Thank you, guys. It's not a big deal. You didn't miss out on much. I'll explain it again briefly. Now, there's an issue going on right now where it appears that broker-dealers like Fidelity are unaware as to what is supposed to happen with your call contracts. All right. The deliverables has changed on the call contracts for AMC1 and AMC2. There are 3 different call contracts for AMC. AMC, AMC1, AMC2. AMC1 call contracts are supposed to deliver 100 shares of AMC shares and 100 shares of APE shares, for a total of 200 shares. Because of the reverse split in the conversion, that gets divided by 10. So it's supposed to deliver 10 shares of AMC, 10 shares of APE for AMC1. Because of the settlement of 1 for every 7.5 AMC shares that you own that you would get for free, for the 10 shares of AMC that you're supposed to get delivered, you get an additional free share. So that's 11 shares of AMC, 10 shares of APE, which is also transition AMC, for a total of 21 shares. The math checks out. And on top of that, you get about $3.75 for the remaining fractional shares for about whatever the 4/10 of an additional share you're supposed to receive. But again, you're not getting fractional shares for the settlement. So you get 21 shares of AMC and $3.75 for exercising an AMC1 call contract. Fair enough. AMC2 is supposed to deliver 10 shares of AMC because those were the ones that came out after, at exactly what moment here did they come out? The AMC2 shares were the old AMC QSIP number. That's it, before the reverse split and before the QSIP change and conversion. So now that that's occurred, that also has to be divided by 10. So instead of getting 100 shares of AMC2 when you exercise AMC2 call contracts, you were to get 10 shares of AMC shares for the AMC2 call contracts. And then you get one more for free due to the settlement of one for every 7.5, and you get $3.75 or so in cash for the remaining shares because they were fractional. Now that amount that you receive in shares adjusts for the strike price changes because the strike price themselves are not changing. Instead of changing the $90 strike on AMC1 to $900, the only thing that changes was instead of getting 100 shares, you should get 10 shares AMC, 10 shares of APE, so that's 20 shares instead of 200 shares, 100 AMC, 100 APE. You follow me? Let me put it down on paper for you guys, if you're not, because it seems that the broker-dealers are unaware as to what's actually supposed to be happening. All right, let's take a look here. So somebody inquired with Fidelity, and they sent me this message, which I copy-pasted here for their own, to not share my private messages, right? Sorry guys, it's the best I can do with my current mic setup. My Blue Yeti is still out of commission because of the cable issue, which I'm not too concerned about. So today, he said, today I called Fidelity to inquire about my adjusted AMC2 $8 call contracts. I just wanted to get familiar with the exercising process since I have never exercised my contracts before, he said. The first person I spoke to in the options department didn't know shit, per usual. So then they connected me with someone more experienced, and that person told me my $8 calls were not in the money yet. So of course I was confused, he said, and asked why if AMC is trading at above $10 are my AMC2 $8 call contracts not in the money. He said the adjusted strike price for those contracts are $72. Now, if you ask me, based on the information we received from the Options Clearing Corporation, that doesn't make sense. Because obviously, if you take 8 times 9, that becomes 72. So they're using a multiplier of 9 for some reason in Fidelity for the strike price on AMC2 call contracts. So then he inquired about the AMC1 call contracts with the $90 strike price. Those are the ones that deliver 100 shares of AMC, 100 shares of APE, pre-split, post-split, it equals 10 shares of AMC, 10 shares of APE, and 1 free share, and then $3.75 in cash as well. He said the adjusted strike on those contracts is $428. And if you take $428 and you divide it by the $90 strike, that's a multiplier of 4.75 repeating, which makes absolutely no sense to me whatsoever. Because even if you multiply that by 2, if you want to say it's due to 100 shares of AMC, 100 shares of APE, that still equals 9.511 repeating. So to say that I'm confused on that and what they're trying to do is an understatement. I do believe that they're not aware that the strike price should not be adjusted for these call contracts. Now, if I'm wrong, somebody please fill me in here and let me know otherwise. But we're going to do a little bit of a dive. What do you guys think? What do you think, Chase, Cash Money? You other fuckers. I've got a lot of information about the AMC2 and the AMC1 call contracts. I've just got to sift through it to look for it. What's up, bro? Go ahead.
Well, you have most of them. Most.
They can't both adjust the number of deliverable contracts and then adjust the strike price as well. Because if I'm getting 10 shares of AMC at an $8 strike, and they want to multiply the strike by 9, so then the strike is 72, and I'm supposed to pay $72 to get 10 shares of AMC. I'm supposed to pay $720 on an $8 strike. That doesn't make any fucking sense. Cthulhu says that the value of the 10 shares adjusted per contract is adjusted, but they never updated the strike price. They aware I didn't get assigned after the split. If you could elaborate, I would appreciate that, Cthulhu, because per my understanding, they already made the adjustment. They should have made the adjustment either on the number of shares deliverable. So if I'm going to be paying $900 instead of the $90 for that strike, I should receive 100 shares. Or if I'm receiving 20 shares of AMC2 at $72 contract, that doesn't make sense either, because that's a multiplier of 9. So why are they even doing that? Or why are they trying to do that? And where are they coming up with the number for the AMC1 call contract at $428 strike? Now, if the strikes are adjusted, that's fine. But if the strike is adjusted, then the number of shares should also be equivalent. So I want to look into it a little bit further and discuss it with you guys, because there's no better way to disseminate the information than to do it together as a group. That's why I asked you guys to join me here for a quick emergency meeting, and we can discuss it further. All right.
Only one.
Only one adjustment makes sense. Correct.
Yeah, it can be most of them. They would make no sense.
That does not make sense.
I would just like to add that I don't know if it's just me, but the friggin' app on my phone shows nothing like what shows in my portfolio when I pull it up on my computer.
Really?
I had to call them about my options contracts because I was negative 100% on my $9 calls for December 15th that I bought just 2 weeks ago. Negative 100%. And the price that day was $9.29 when I called them.
Fair enough.
And they were like, no, that's not right. We see something totally different.
What did they see?
So, if you, that I was about 50% because I had bought the contracts at about $8.50 for pretty cheap. So that made sense. But if anybody is looking at their app and going WTF, look it up online and it'll make more sense. And plus, everybody I've ever spoken to at Fidelity is a complete effing moron.
No,
So
that
there's
is
that
true.
too.
That is very true. I have never had someone who actually
Yeah.
understands what's actually happening with AMC at these broker dealers without having to go up the chain like 10 times.
Exactly. This last guy I spoke to actually explained it to me in detail, and I was like, wow, thank you. That's the first time that's happened. Anyway, FYI, kids.
Mm-hmm.
Can I make a comment real quick?
Yeah, please do. That's why we're here.
Thanks, man. It's me, Ho, by the way.
Brother.
So I was checking all week just to check on this AMC $190 strike. When you try to sell one and just press preview, it says on the side to be in the money, it needs to hit the price that you're talking about right now, which is $428.
Okay, you are
Which
seeing that.
is yes, you
Okay.
do see that. So when you
On what
try to
broker?
sell just one contract
Mhm.
on Fidelity,
All right.
but when you go on the profit loss calculator and you enter the price, let's say hitting $100, it shows that you're making like thousands of contracts, even though you're not in the money per their $428 strike, price. So there's confusion there too. So if you play with the profit loss calculator on Fidelity and you put that the stock, the price hits like $100, it shows that you make a ton of profit off it. But when you try to actually sell the contract and press preview, it says to actually make profit, you have to hit $428.
Okay.
That's all I wanted to say.
Okay, that's good to know. Let's take a look here. You know what? I'm going to share my screen with everybody.
I put on what E-Trade has when you click the contracts. This is Alex, by the way.
Thanks, Alex. Let's see. All right, good. Here we go.
One.
Perfect. Hang on. Here we go. We got Ahan over here. Ahan 01. Alex just put the deliverable, adjusted contracts. This is a 90 strike. It's obviously AMC 1 because you get 21 shares. Again, you get 10 shares AMC, 10 shares of APE, 1 free share for your AMC shares, and then $3.74 in cash deliverables, blah, blah, blah. Effective strike of this contract is showing up at $428.39, which, when you think about it, makes perfect sense that the strike price was adjusted, but why were the number of deliverable contracts adjusted if they also multiplied the strike? That doesn't make any sense, does it? Let's take a look at what Awake Space has posted here. He says, those are all good questions, Investor Services told him. As for the 5-day minimum, this is typically applied to an IPO. It's possible at CBO, the listing exchange, determined that APE is not subject to this criteria. Okay, I'm not sure exactly what this is getting at. Oh, that's from the Options Clearing Corporation, Investor Services. Yeah. Look at what you just said. They're double dipping on the adjustment, is what Awake Space says, and that's exactly what it looks like. Because now here's the $35 strike on E-Trade, pre-split AMC 1. Well, the pre-split AMC 1 contracts post-split is what we're looking at. Yeah, because if they're increasing the strike here to 166.49, that's actually, it's not a full 10x gain there divided by 35. It's that same 4.75 multiplier that they're using. Why are they using a multiplier of 4.75? Because even if you add, let's say if we have AMC and APE combined. No, Tully, I'm not sweating it either. I'm just trying to get down to the bottom of what it is that they're fucking doing here with these contracts. What is the end game for these brokerages, and how are they coming up with these numbers? Because none of them can seem to explain that. They can explain that supposedly this is the effective strike of this contract, and you're going to get X number of shares and cash deliverables, but nobody can seem to explain why it's this number and why the multiplier on these is 4.75 and on the others it's 9. I have a feeling when these things go in the money, they're going to be worth catastrophic amounts of money.
On top of that, Charles Schwab has the same thing on their options chain at the very top as well on the mobile app.
Yeah.
It shows you the multiplier and everything.
Wakespace says, just saying they got back to me ASAP via email. They appeared to nix the attempt to get ape options through illegally after they were alerted to it via email. Just saying, if there's fuckery, email the OCC and they will tell the answer, and then you can hold your brokerage accountable, and possibly so will the OCC. I think that we would need to contact CBO and the OCC, the Chicago Board of Options Exchange, and the Options Clearing Corporation, both. Now, it looks like Lack Attack's got 227 break-even stock price for the January 19th, 2024, $25 calls. So your $25 call was adjusted to $227. 227 divided by 25 is 9.08. So that must be an AMC2 call contract. Yeah, there it is. AMC2, 24 being the year. And that probably says 0119 after the fact. Yep. So the multiplier for the AMC2 call contracts is basically 9, and the multiplier for the AMC1 call contracts is 4.75. So if you have $90 strike, you got to multiply that by 4.75 to come up with the real strike price of $427.50. And if you have the AMC2 call contract, so you got the $25 strike, you have to multiply that basically by 9 to come up with, actually it's 9.08. What a stupid number to come up with a $227 break-even price. Okay, that's really interesting to know. Thank you, Paradigm Reality. Appreciate you and everybody else for joining us here and having this discussion together. Yeah, beast mode, here's another explanation here is the adjusted options, the multiplier is 100. So it's controlling 100 shares. The deliverable number of shares is 11. 11 shares. AMC cash is 3.74. You know what? This actually, this is not definitive information, but when you think about it, it's kind of plausible here in one sense, because if it's a multiplier of 100 shares, that would be 100 pre-split shares. The deliverable would be 11 post-split shares, 10 shares plus the 1 free share for the 7.5 settlement, and then $3.74 in cash. I think cash money, this actually does make sense. But where they're coming up with these numbers specifically, and the multiplier here of 9 for the AMC2s and 4.75 for the AMC1s, is what doesn't make sense to me. Let's take a look at what the Options Clearing Corporation said. Say it again. Yeah, the thing, it still doesn't make sense why there would be fewer shares. If they're adjusting the price, there would be fewer shares deliverable. The only thing I could think of is that it could possibly be due to the premium paid, the amount of premium paid for the strike.
Okay, can I chime in real quick? So the $9 calls I mentioned earlier for December 15th that I purchased on September 25th.
Is that AMC 1,
I
AMC, or
purchased
AMC 2?
just AMC.
And
Straight up AMC.
You bought those post split?
Yep, post
Okay.
split.
What about them?
And just because I had some dry powder left over, and it said that I had 15 shares purchased, but in parentheses it says 11 shares. And I kept asking the guy, what does that mean? And he was like, I don't know, but you have 15 shares. Well, I'm asking you, why does it say 11 shares in parentheses? What does that mean? I don't know, but I see you have 15 shares.
Okay.
I'm totally confused.
Alex, mute yourself, please, if you're not going to say something, please. It's a lot of feedback.
Did you hear me, boss?
I heard you. Yep, I just don't know what to say, so I appreciate it.
Okay. Yeah.
Thank you. Let me see here.
Hey, boss.
Go ahead, brother.
I thought maybe it was because of the premium also, but if you try to buy that AMC $190 strike still, it still shows $427 to be in the money if you pay $1 to buy that contract right now.
Where does it show that, though?
So when you try to so you can even try to buy it
itself in the trade window.
Yes, in the trade window, yes. Right before you press preview, right when you put in settle one contract or buy one contract, and then you put like the limit price on it because it's after hours right now. On the right bottom corner, it'll say to be in the money, $420 something, even if you buy it right now.
Okay.
So for a $1 contract, it has to hit 428 to be in the money. It makes absolutely no sense. Maybe what that means is once it hits that price, it'll be equivalent to 100 shares again, which is why you're still making profit when it's not even at $90 strike. That's all I can think of.
Okay, let's take a look here at what the Options Clearing Corporation said. There's two different ones. There's one on August 22nd, one on September 6th, and even more on the 23rd, 24th, and 25th. So bear with us here if you're interested in options. This is probably going to be important to you. Adjusted AMC on, let me go back to the August one. Let me start at the first ones. So it says adjusted AMC holdings, adjusted option symbol AMC1. AMC1 options were adjusted on the 22nd of August and will be further adjusted on the 23rd, 24th, blah, blah, blah. The new deliverable will become 10 AMC common shares, subject to the delayed settlement until the contingencies have been met. Basically, you get the one free share for the other 7.5. Okay, and then number two is also one AMC common share if all contingencies to the distribution X date of August 23rd are met. And then three, cash in lieu of approximately 0.333 fractional AMC shares if all contingencies to the distribution X dividend date are met, and 100 AMC preferred equity units. Okay, that's in August, and then I'm sure they changed that in September. So it said, note, AMC will undergo a 1-for-10 reverse split on August 24th. All ratios above are in post-reverse split terms. Adjusted AMC1 options will be further adjusted to reflect below. The new multiplier is 100. Example, for the premium or strike dollar extensions, $1 will equal $100. Yep, the multiplier is 100. So the strike dollar extensions is saying $1 will equal 100, $90 would equal 900. But that's not what's occurring here with this number. So let's move on to the next one. So yeah, we see here at the time on August 22nd, they had 10 AMC common deliverables, one common deliverable for the settlement, and then the cash in lieu, and then 10, oh here's 10 new AMC Class A common shares subject to delayed settlement. Yep, okay, that makes sense. The 10 for the APE shares. Now let's take a look at September 6th, 2023. If you don't care or hold hold any AMC options, this probably doesn't matter to you, but I still think it's important for everybody to be well informed whether you own options or not. If you don't care, then that's not my problem. I don't, do whatever you want. But looking here, September 6th, adjusted AMC options were adjusted on August 22nd, 23rd, 24th, 25th, right? The new deliverable became 21 AMC shares, Class A common shares, and 2 cash in lieu of approximately 0.3333 fractional shares. Only settlement of the cash portion of AMC1 options was subject to delayed settlement. OCC has been informed that a price of $11.21 per whole AMC share will be used to determine the cash in lieu amount at a rate of 0.3333. Where did they come out with that $11.21? Share price on September 6th? So that's why they get $3.74 per AMC1 contract in cash, which makes sense. Now the exact cash in lieu amount has been determined. Options Clearing Corp will require put exercisers and call assignees during the period of this to deliver the appropriate cash amount. Okay. So basically what it's saying, if you exercise your call contracts, here it says put exercisers. Okay. This is not 100% making sense. The people that are assigned the call would have to deliver the appropriate cash amount, or the people who were exercising the puts. Okay, that does make sense. So you'd get 21 shares of AMC, $3.74 in cash, and a multiplier of 100, which means that a premium of $1.50 yields 150 normally. Okay. So here's the underlying price for AMC determined as follows: 0.21 times the price of AMC plus 0.0374. For example, if AMC closed at $13.64, the AMC price would be calculated 0.21 times 13.64 plus 0.0374 equaling $2.90. And they have other memos too that I think are probably going to be pretty important to read. Here's the memo numbers actually. Let's find the OCC memo.
Hey, boss. I threw up the trade calculator off of what's it called, Charles Schwab. I don't know if it's going to help you with anything, but you can just look at it. That's what I just popped up, just scrolling around looking at stuff.
Appreciate that. Okay, so we got the one from August 22nd, the one from August 25th now. This was after the conversion. Adjusted AMC, determination of deliverable for adjusted option symbol AMC1. The new deliverable became 10 AMC common shares, 1 AMC common share for the settlement, and then cash in lieu for the 0.3333, and then 10 AMC common shares as a result of the APE conversion. So instead of getting 200 shares of AMC and APE, you get 20 shares of AMC and APE, and then the 1 free share. Makes sense. All of the contingencies in the previous memo that we looked at were met. So the deliverable option is 21 AMC common shares, 10 AMC shares, plus 1 AMC share resulting from the distribution, plus 10 AMC shares resulting from the APE conversion, and the cash in lieu of approximately 0.3 fractional AMC shares resulting from the distribution. Perfect. And if you were to exercise your call contracts, anybody with puts or being assigned a call would have to deliver the appropriate number of AMC shares. Once determined, the cash in lieu of fractional share portion of the option deliverable remains fixed and does not vary with price changes of any security. So the cash in lieu price is fixed and will not change with the increase in the price of the stock, which is fine. That makes sense. The AMC component of AMC 1 exercise/assignment activity, which was delayed from the 23rd through 24th, will settle through the National Security Clearing Corp. OCC will continue to delay the cash portion of the AMC 1 deliverable until the cash in lieu amount is determined. Upon determination, OCC will require put exercisers and call assignees to deliver the appropriate cash amount. Until the cash in lieu amount is determined, okay, we got that. And we can email here for questions regarding the memos as well to memberservices@theocc.com. Beast Mode, you took a screenshot of this here. And this is for your $10 call contract for AMC2. So what you're telling me is that your AMC2 call contract is showing that it would obviously be in the money at $10.27. That way it'd be worth a $24 profit, right? Because you bought to open one call contract for AMC2, which would deliver you 11 shares of AMC for the $10 strike price, expiring January 19, 2024. And at the $10 strike, it would be negative $3 loss, which also makes sense because you've got to account for the premium that you paid. And your break even will be $10.03. And at $10.27, you'd be profitable $24. And if the stock price goes to $14.32, you would make a profit of $429 off that one $10 call contract that cost you. What'd that cost you? 20? Let's see. Let me take a guess. It cost you like $40. I don't know if Beast Mode is still there or not.
No, actually, it only cost me like $2.
$2.
And change, almost $2.
Yeah, it was 2 cents, so you ended up paying $2 because it's AMC2, not a standard AMC call contract, right? Makes sense. I was thinking of regular AMC. So this is showing basically that if it goes to $10.27, you're profitable. Your break even is $10.03 at the expiry, which is January 19th, 2024. So basically what it's saying is if your potential profit for every one of these $2 $10 strike for AMC2 that costs you two pennies multiplied by 100, it costs you $2. So that $2, if it goes up to $14 and change, is worth $429. Makes sense to me. That's how I know call contracts too. If you look at that now,
And that's what I figured for the most part.
and this is on E-Trade?
The picture that I took for you, no, that one came off of Charles Schwab.
Off Schwab, okay. Then it looks like one of them is wrong. Like either Schwab or E-Trade is wrong here. And same as Fidelity. Like some of these brokers are way off. And I'm not sure which one it is yet. Because when I'm reading, go ahead, Cash.
Only one that way.
Only one can be correct.
Yeah.
The new multiplier is 100. Contract multiplier 1, new multiplier 100. Example, for premium or strike dollar extensions, $1 equals $100, which is always been what it is. The multiplier has always been 100 because it's indicative of 100 shares. So that doesn't change the strike price. A part of me really feels like these brokers are not properly pricing the call contracts. And another part of me, go ahead. Another part of me is also kind of understanding of where they're coming from. But if they were increasing the strike price, it says right fucking here the strike price is unchanged. What the fuck? It says right fucking here. These motherfuckers. They're fucking idiots or they're crooks or both. What the fuck is going on with these brokers? It was staring me in the face the whole fucking time. We gotta email the OCC. The level of criminality never fucking ceases to amaze me. Are you fucking kidding me?
Really dumb.
Fuck these motherfucking brokers. Fuck these pieces of shit. I know. You can exercise any AMC 1 or AMC 2 call contract that is in the money right now. Should be exercisable. Because the strike price, wait, this is for AMC 1. Now it says right here the strike price is unchanged. I'm not fucking wrong. You're not fucking wrong. Chris, thank you very much for Chris, thanks for the super chat, brother. You didn't have to do that, but as a matter of fact, it allows me to see his comment, and what he says was, I quote, "I have 2 pre-split contracts at $5.50. That means AMC 2 call contracts. Chris has AMC 2 call contracts with the strike price of $5.50. He says, I tested it exercising, and it allowing me to exercise 200 shares. Shh, he says. Everybody with AMC 1 and AMC 2 call contracts that are in the money right now should theoretically be able to exercise without a problem. Chris, if you're still in the chat, brother, would you mind dropping down and tell me what brokerage firm you're talking about in this comment? Counterparty Risk, also thank you for the super chat as well, my friend. That was very kind of you. Too kind. All right, we need to email the Options Clearing Corporation because this clearly says that it's unchanged. Very, very clearly. Here's the most recent one. Let me copy the link address. Here's their mail. Let me open it up in a separate window and then I'll slide it over so that I don't dox any of my contacts. But yeah, this clearly says the strike price is unchanged. Strike price on this one also says unchanged. The strike price, strike divisor here says 1. The divisor changing makes sense, but that doesn't change the strike price. That's the divisor. Okay. We're on to something here, ladies and gentlemen. Good job, Chase. Yeah, I need to contact everybody. Everybody. Let's go here.
Everyone needs to know that very, very important.
Everybody needs to know. Oh, let me just delete this shit down here.
Like they're banking on confusion.
Well, obviously. But the thing is, are they dumb or are they trying to keep people from knowing that? Who pays? If the shorts don't deliver the fucking shares, who has to deliver the shares? The broker dealers. So why would the broker dealers want us to exercise our fucking call contracts? They wouldn't, because if you do, that's a gamma ramp. It causes them to delta hedge and a gamma squeeze and more FOMO buying. So the brokers have every incentive to keep retail from understanding the fact that the strike price is unchanged.
Yeah.
These fucking cucks. All right, let's get our thinking caps on here. This is some bullshit if I've ever seen it. Yeah, that clearly says that the strike price remains unchanged. Right there. Okay, so we need to email.
Goddamn. I can't believe that.
I'm dumbfounded here, man. I can't believe it at all. Member services, and then we have to email investor educations. And I mean, theoretically, no, it should be the OCC. I don't see why CBO would have to be contacted for this at all, because this is the OCC's ball game. You guys still with me in the chat over here on Discord?
Yeah, I'm still here. What's up?
All right. Do you have any AMC one call contracts that you could possibly take a screenshot of this profit loss by any chance?
I'm looking at mine.
You said, do I have any?
Yeah.
Let me go back and look.
All right, Lack Attack, I'm going to take this screenshot and I'm going to send it to the OCC as well. But I need to know what broker this is. It looks like E-Trade, but I don't have them, so I'm not positive. $25. Strike showing break even 227. And then Alex, what broker is that you have showing me the deliverables?
The two screenshots I sent were from E-Trade.
E-Trade deliverables for AMC1, right?
Yeah, AMC1. It's a 35 strike and a 90 strike in January.
Thank you.
I'm sending you a screenshot of what I got on this drop.
Send it, as long as you're not doxing yourself. Drop it in Ape Chat.
Okay. Let me just make sure.
E-Trade strike. Wrong. email options@theocc.com. We got that. Yeah, that's too fucking clear. Right here it says strike prices remain unchanged.
And they're on Schwab. They're unchanged on Schwab.
Unchanged on Schwab as well. Yeah, they should be.
Yeah.
My friend Long on AMC here sent me this message. Hey man, Long on AMC, is there any chance you could screenshot that? You could screenshot that shit and send it to me or drop it into Ape Chat. I know it probably came off email or something like that, so make sure you don't include your private information or that information you got from Fidelity. I don't know if you copy pasted it or what.
Spoke with them in person, boss.
What?
Can you hear me, boss? I spoke with Fidelity in person. I didn't email them.
Gotcha.
Oh, I'm sorry. Over the phone, not in person.
Yeah, I understood what you meant.
It wasn't. Yeah.
All right.
Sorry about that.
No, you're fine. Pickle Snake, yours looks different. Yours is showing me the AMC 1 call contracts for $90 strike.
Right.
Being a loss of $2. If you scroll down past 90, does it show anything or no?
Oh, that's what bugs me, is it doesn't show anything past 90.
Because 90 will obviously be a loss because your premium paid.
Yeah.
So we have the soonest you can get to a profit is like 92 or something like that, $92 or $92 and change. Okay.
I don't understand why it doesn't go past that point.
Yeah, that's kind of bullshit on Schwab's part or whoever the fuck that is. Oh, you did get a great fucking deal on these AMC 1 contracts, even though they're currently cheaper, obviously, because we're farther from the money, but the deliverable changed, the strike price did not change.
I mean, sounds like a great thing. It's a hell of a lot better than what we thought it was.
AMC 1 and AMC 2 just a call. Whoever that is, mute your mic. That is fucking obnoxious. All right. These are all the updates from the OCC. AMC 1 and AMC 2 adjusted call contracts. Brokers incorrectly changing the strike prices. Hello, Team OCC. A group of retail investors and I have been looking into the AMC 1 and AMC 2 adjusted call contracts that we have purchased. A multitude of brokers have given us varying information, and none of it seems to match that which was provided by the OCC directly on your multiple memos issued from before and or after the AMC reverse split, conversion, and settlement of 147.5 AMC common stock shares. As you can see from the memo below, the strike price remains unchanged. This is exactly the same on all of your memos in regards to AMC1 and AMC2 call contracts from the prior QSIP effective August 22, 23, 24, 25, and September 8th, was it? September 6th, 2023. That being said, multiple retail investors are hearing that they're let me start off first. So the strike price remains unchanged and the deliverables remains 100. This makes perfect sense. The number of shares being issued is the word I'm looking for here. The new deliverable per contract. I meant multiplier over here. Multiplier. Number of shares being delivered. The new number of shares being delivered per contract has changed to 11 for AMC2 calls. That same new deliverable number of shares on AMC1 calls has changed to 21 AMC common stock. That being said, multiple investors are being told, better yet, being instructed by their broker dealers that they are not allowed to exercise these call contracts. You see, why this is important is because a lot of people may not realize this, but when you exercise a call contract, it goes direct to the lit market. It only goes to the lit exchange. They can't send an exercising call contract per every iota of understanding that I have of the stock market. It cannot go to a dark pool. So when you exercise a call contract, the broker dealer has to go out onto the market and buy the fucking shares to deliver to you via the DTC, basically. So even if they didn't, they still have to buy the shares, whether they buy them in a dark pool or buy them on a lit market, and they have to deliver them to you. And that causes a gamma ramp. Anyways, that's neither here nor there. That's just a fact. That being said, multiple retail investors are being instructed by the broker dealers that they are not allowed to exercise these call contracts, even though they are in the money. For example, let's put Exhibit A in here. And you know what? Let me just put... Actually, I'm going to upload all of these... showing that the strike price is unchanged so that they don't have to go and look around. Memo number 53141. OCC memo number 53141. And the other ones as well. 53089. And this is the one I should put first, actually. 53076. Etc. All right. I have to grab that one still, which I better just do it now before I forget. OCC. No, wait. That's 53141. That's the right one. Yep. Never mind. I can't fucking believe it. If I could be wrong, But this doesn't fucking lie. It says that the strike prices are unfucking changed. So now my break even, let me see.
Then where's Fidelity get the 428?
That's what I'm wondering. The break even might change, but the break even is not the same as the strike price. It doesn't have to be the same. It's never the same. Your strike price is never your break even because you have to account for the premium.
Bingo.
This is fucked, man. I smell fuckery. These broker dealers are trying to fuck us out of exercising our call contracts. And I think it's because they know that they're going to be on the fucking line for delivering all these millions of fucking shares of calls that are in the fucking money. All these $8, $6, $5, $7, $10 call contracts that are in the money right now, if you exercise it, the broker's got to go out and give it to you at that price. And they fucking know it. Cash just said that means Fidelity aren't properly delta hedged. My brain's about to explode. The possibilities here are terrifying. Terrifying for shorts and broker dealers and the entire financial system at large. Not for AMC retail investors. This is one of the most bullish things I've ever fucking...
Wow. Amazing.
Let me bust out the screenshot. No, what? For a $25 strike price. Oh yeah, so, okay. That's right. Here is a screenshot. This is E-Trade, Alex, is it? Whoever showed me this one with the $227 break even. Sorry, there's so many brokers. This is here's a screenshot of E-Trade showing that the break even for this contract is $227.
Hey, boss, I don't know if you heard me before, but that's Thinkorswim.
Thank you.
Yeah, sorry, man. I was muted the whole time and I couldn't even push to talk, so.
Oh, I see. Who's that? Lag Attack. What's up, brother?
Yeah, it's Lag. Yep.
Thanks so much.
Yeah, no problem.
Thinkorswim showing that the break even for this contract is $227. Theoretically, as the strike price remains unchanged, regardless of the number of shares, not deliverables, what's the word I'm looking for? Yeah, so strike price remains unchanged, the multiplier remains 100, makes perfect sense. The new number of shares being delivered per contract is changed to 11 for AMC2, and the new deliverable number of shares on AMC1 calls is changed to 21 AMC common stock. Obviously, both of these include the one extra share from the settlement. Plus cash for fractions. All right. That being said, multiple retail investors are being instructed by their broker-dealers that they are not allowed to exercise these call contracts even though they are in the money. The broker-dealers are claiming that we can't exercise these in-the-money call contracts because the strike price has been changed, quote unquote. That's what they're saying. But obviously, as we all know, it's not been fucking changed. For example, here's a screenshot from Thinkorswim showing that the break even for this contract is $227. Theoretically, as the strike price remains unchanged, regardless of the numbers of shares, the break even should remain around $27.02, accounting for the premium that was paid. And the changed number of deliverables from 100 to, this is AMC2, so that's 11 total shares. Think or Swim is not allowing the exercise of these contracts. In addition, fellow retail investors that have brought this to my attention have been told today, as a matter of fact, today, October 11th, 2023, by Fidelity Brokerage, that they cannot exercise their call contracts. And which call contracts was those? Long and AMC. Let me look real quick and find out. We will get to the fucking bottom of this. Here's a screenshot, exercise screenshot for option 1. For AMC. Option 1 option. Oh, for one option. I got you.
Yeah, it's just for one option. Sorry.
No, don't worry about it, man. All right, thank you very much. Let's see. Who posted this one here? OTG Mo 1241. Thank you, brother. Let me see what we got here. You got 105 call contracts for January 19th, 2024. $25 strike for AMC2 adjusted options, which would be a deliverable of 11 AMC shares. Yep, 11 AMC plus cash. Yep, okay, perfect. January 2025 expiration. Looks like your gain.
Boss, I'm going to send you one to your private message of what I have on Schwab.
All right, send it over. I won't show it on my screen. This shows an unrealized gain of $1,555, 239% unrealized profit. Okay. As of October 12th at 12:12, so you're an hour ahead of me, and this was taken like 18 minutes ago or so. Okay, gotcha. So this one would be, I mean, you've got fucking some serious profit to make if the stock keeps going up. Some serious fucking profit to make, but it doesn't show what we're talking about right now, although I really appreciate you sending that over to me. OTG.
That's why I think none of my options will go past the strike price, because they're afraid to show you exactly the potential.
That's very possible. That's very, very possible, actually. Because at $92, it wouldn't be in the money by $2. It'd be in the money. Well, it's out of the money right now. No. I'm going to backtrack there.
Even my AMC2s, none of them go past strike price. My 20s, my 22s, my 26s.
Really?
Don't show past strike.
No.
No.
What broker?
Schwab.
Schwab?
Yeah.
You should try their web also, not just their downloadable app.
I'll do that right now.
Yeah, give it a shot. Don't post it, just check it. Has anybody else here tried to contact their brokerage in the YouTube chat? Ryan Nolan asks, is the float of AMC bought 4.75 times over maybe? What's this 4.75x number? Where does Fidelity get that multiplier? And that's exactly what we're fucking saying, dude. Because you got one multiplier for one stock for AMC1 shared call contracts. and they got a multiplier of 9 for the AMC2s, but that doesn't make any sense because the information memos from the OCC clearly states that the strike price remains unchanged. So, say for example, a $10 call contract on AMC1 or AMC2 is in the money. An $8 call contract on AMC1 or AMC2 is in the money. It wouldn't multiply by 100 because the strike price is unfucking changed. Fellow retail investors have been told today, October 11, 2023, by Fidelity Brokers that they cannot exercise their call contracts for AMC1. Let me pull up the right strike and the right screenshot as well. That's not the right one here. January 19th, 2024 at the $8 strike price. Would you please advise if these calls are in fact in the money or currently out of the money, as your memos clearly state that the strike price remains unchanged and that the reason for the deliverables change from 100 or 200 for MC1 to 11 and 21 shares respectively. This is fucked, man. This is absolutely fucked. What are these fucking crooks doing? Let's see, we got their website here for the information memos. Search. Let's do a search on them. Search by keyword, AMC, baby. Okay, they've also got 53142. Here's another one. Okay. Cash and lieu settlement adjusted. This one I haven't seen before. Strike price unchanged. Okay, let's read it. September 6th. Now this is memo number 53142. We'll just add that to my fucking email. Adjusted AMC options were adjusted on August 23rd, 24th. The new deliverable became 11 AMC Class A common shares and 2 cash in lieu of approximately 0.3 fractional AMC shares. Only settlement of the cash portion of AMC2, 1 AMC2, 2 AMC2 options exercise / assignment activity was subject to the delayed settlement. Okay, I follow. OCC has been informed that a price of $11.21 per whole AMC share will be used to determine the cash in lieu rate. Okay, etc. That was probably the closing price for the date, I'm guessing. I'm just going to go with it. Now that the exact cash in lieu amount has been determined, OCC, yeah, okay, they're going to require put exercisers and call assignees to deliver the appropriate cash amount. The cash in lieu of the option deliverable remains fixed. Yeah, I know that. Terms are as follows. For all three of them, AMC2, 2 AMC2, and 1 AMC2. 11 AMC Class A common shares and 2 3.74 is cash. But here, this is for AMC2. This is not for AMC1. Okay, AMC1 and 1 AMC2 are two different things. I just want everyone to be aware. Okay, AMC calls are different from AMC1 calls, are different from AMC2 calls. This is discussing AMC2 call contracts. So AMC2, 1 AMC2, and 2 AMC2, per my understanding, are regarding the AMC2 calls. Then the other ones that I showed you just moments ago, this one is for the AMC1 call contracts. They were issued on the same date, September 6th, which makes perfect sense. So here's the one for AMC1, the one for AMC2, and it issues the deliverables being 21 shares of AMC and cash for AMC1 with an unchanged strike price. And then for AMC2, it's 11 shares AMC plus cash with an unchanged strike price. And the QSIP shows here clearly 00165C302 for the AMC2, and the QSIP as well for AMC1 is the same there. Okay, the multiplier is 100, and the deliverables has changed. The strike price has not changed. The AMC component of these AMC2s, exercise assignment activity, has settled through the NSCC. The cash will be settled by the OCC. Yeah. I think we can exercise our in-the-money contracts, boys and girls. Robert M. says, they just don't want to locate those shares. It's simple as that. Hence the delay of truth and misinformation. Everybody should flood them with emails, says Gialis. I think you're right. Martin Skiba, I understand the deliverables. The deliverables make sense, my friend. The problem here is that brokerages like Fidelity are telling people, like they just told my friend here, Long on AMC is his screen name, today, that his $8 strike price call contracts could not be exercised, even though AMC's at $10.50 a fucking share. All right. In addition, fellow retail investors that have brought this to my attention have been told today, October 11th, 2023, by Fidelity Brokerage that they cannot exercise their call contracts for AMC1 January 19th at the $8 strike price. I want my fucking money. So, would you please advise if these calls are in fact, if these long calls are in fact in the money or currently out of the money, as your memos clearly state that the strike price remains unchanged and that the reason for the deliverables changed from 100 for AMC2 or 200 for AMC1 to 11 and 21 shares respectively. Yeah, here, I'll fucking give you your own goddamn memos for all I fucking care also. Expiration pricing consideration. Let's take a look at that one as well, just to make sure I've covered all my bases and I'm not wasting my fucking time. AMC2 and 1 AMC2 will be subject to special pricing consideration and expiration processing on September 1st. The pricing consideration is due to undetermined cash in lieu of fractional shares. Okay. Okay, so this was before they figured out what the cash in lieu. Okay, so that's fine. Then that doesn't even fucking matter. Expiration pricing consideration for AMC2 options. Okay, normal. Adjusted option symbols, normal. AMC1, adjusted determination of deliverable, normal. 1 AMC becomes 1 AMC3. Reverse split option symbol. Let me take this one, check this one out too. They announced the 1-for-10 reverse split, correct. They're become effective August 24th, correct. 1 AMC remains 1 AMC with adjusted deliverable described below. 1 AMC changes to 1 AMC3 the following day. 100 multipliers, correct. Strike divisor 1, contract multiplier 1, new deliverable 10 AMC common stock. Everything makes perfect sense. This makes perfect fucking sense. I can see absolutely fucking clearly now that Fidelity is wrong. Fidelity is fucking wrong. Oh, that's on my desktop. Oh, shit. Whoops. Long on AMC, bro. Those calls can be exercised, dude. Fuck Fidelity. Pieces of shit. And I might as well, you know what, I'm going to take a screenshot of what you sent me as well in Discord. Let me gather all my information together here. I'm going to pull this aside. These fucking crooks, man. All right, so let me check my DMs over here. Beast mode, good looking out. And you know what? Yeah, he makes a good point here. He's showing me some of his call contracts, and the premium is not reflective of what it should be at for an in-the-money call contract. Because $10 calls on AMC2 are in the money, and for it to be worth 2 cents or 4 cents makes no fucking sense. No pun intended there. All right, let me just pop that in right here. And then the E-Trade strike price as well. We can pop that shit over here. E-Trade. E-Trade is also making changes to the effective strike of this contract, showing the correct number of deliverables at 21. However, they've changed the strike to $428.39. Where did they get this number for the strike? And now, oh, I should write for AMC1. And then here's the other one. It's the, what the fuck? Okay, here's another one. With a $90 strike. I think this other one was here's another from E-Trade at the $35 strike for AMC1, but they've manually, internally adjusted the effective strike of this contract to $166.49. Let me switch it up here. How does this affect our ability to exercise calls? Oops. Anybody else got anything else you'd like to add before I shoot this shit out? Because yeah, as you can see here, oops. Let me come on.
Can you hear me?
I can hear you now.
I was just gonna say that the way I'm understanding it is like the AMC2 call contracts, like I have some January ones for 24. Their $8 strike price, to exercise it would cost me $800. but I can buy 11 shares right now at $10 cheaper than I could exercise those 11 in that one call contract.
Yeah, and how does that make sense, right?
I mean, I don't
Because if
know
you
how
pay
that-
$800, you should get 100 fucking shares,
Yeah,
right?
right.
Exactly. Exactly.
Right,
So how
that's what I
dare
was
they?
thinking.
How
And-
dare
and-
they? Thanks for bringing that up.
Right. Well, I mean, a lot of those, when I bought them, I mean, that was right before the reverse split and everything, and they knew that was going to be coming. And they were still selling, selling those contracts like that, so I didn't understand that, but the way, on Weevil, where I'm trading the options at, it's got that, so it's going to cost me $800 to exercise one of them, and I'm only going to get 11 shares. So in order for it to be worth my while, the price of the stock is going to have to be like $80 for it to be worth it for me to exercise that.
Well,
And I don't know if the reason they're keeping the premium so low is because they just don't want to have to go out and actually find those shares. Because I mean, if your premium was, or your whatever you're paying was higher, people might be more incentivized. I don't know. It's weird.
All right, awesome. Thanks for chiming in, dude. Because yeah, that's what I was saying as well. It's like, hey, if I'm gonna pay $800, I better get 100 shares. You know what I mean? That only makes sense. Why would I have to pay $800 to exercise an $8 contract and only get 11 fucking shares? That makes no sense whatsoever. All right. Well, let's send that off, and I will keep you guys posted on what we get back from the OCC. I've just sent that off there. All right, that's really fucking interesting and hella entertaining, if I gotta say so myself. This is beyond fucked, boys and girls. Let's see. Cyrus says, if you think that's messed up, Weevil requires anyone buying AMC 1 or 2 contracts post-split to call in to buy them, which artificially suppresses the demand. Absolutely right. That's absolutely right. No Vaseline says it's time to class action these brokers. Mike, we emailed the Options Clearing Corporation for more information on why these brokers are trying to charge us the kind of money that they're trying to charge us for exercising $8 strike price call contracts. Because if you exercise an $8 strike price contract, you got to pay 8 times 100, which is obviously $800. Why would I pay $800 for an in-the-money call contract to exercise to only get 11 shares or 21 shares? I should get 100 fucking shares, because the whole point of contracts is to make sure you get 100 shares or whatever the deliverable amount is for the strike price. So, thank you very much, Yvonne. That's very kind of you. Tully Targus asks, can you copy that email, post in Ape Chat for smooth brains like me to see perhaps? Yeah, I guess I can. Let me reopen that in Gmail, but yeah, I'll copy. I don't see any harm in it, and if they get back to me tomorrow with some information, then we can bring it back up in this channel and on the think tank. And if they don't, then we can all email them and see if we can get some real fucking information from these assholes. Oh, message is too long. Let me see if I can just make it a little shorter. All right, there you have it. So you guys can look through it and delve deeper in the think tank as well. And let me know if I made a mistake, if you see something I didn't see. The link to the memos is right here. It's at infomemo.theocc.com. You can also type in OCC memos, and there's a search bar here on the side. You search keyword AMC, and it will pop up with all the memos that the OCC has come up with on their contract adjusted options and so on. So you can do this at home as well, just by doing that if you'd like to. Christopher said, did someone just fuck around? Yeah, man, I think someone's fucked around, and we're about to find out. That's what I really believe. Let's just create a thread too. We'll create a thread so everybody can chime in. OCC email about AMC1, AMC2 options fuckery. Chime in.
I'd hate to go
your screenshots and other info. Remember not to share personal info or account info or dox yourself. What was that, brother?
I said I'd hate to go knock on their door.
They'd hate that too. Tully Target says if it hits $12, I'll exercise an AMC2 call to see it. I have to see what happens. I know a lot of people right now that have $10 AMC call contracts and $8 AMC call contracts. So maybe other people could consider what would happen. You know, I'm not going to give any financial advice whatsoever or tell you to buy, sell, hold, or exercise anything. But if you do decide to do one of those things, let me know if you exercise on what they say. Cthulhu says, is not in the money. They will update if exercise. Let me see if I can figure out what else he said here as well. I respect what everyone's got to say, and it's the whole purpose behind these live streams and these think tanks. Let's see. I'm having trouble seeing what he said. There's a lot of chat in here. You know what? Yeah, let me pull something up for you guys real quick. Now, here is the obvious truth. Here is somebody explaining what exercising call contracts does. Okay, guys in the chat, try to keep it down for the next 5 minutes, because if you say something right now, it'll come through.
How close we were.
So please hold your thoughts for 5 minutes.
To this system breaking, something failing. How close were we, Thomas?
We were frighteningly close on January 28th when we had 50 million registered shares. At the same time, we had 70 million shares short and 150 million shares short via short call options. So if the call options had been exercised, the shorts would have had to deliver 270 million shares, while only 50 million shares existed. So as the rules are today, the long broker has to, if he can't get the shares, he has to go into the market and buy the shares at whatever the price is. So that could have pushed the price further up into the thousands. When that happens, obviously the shorts cannot pay up. So the brokers, they default on the brokers default on the clearinghouse, and the whole thing is a huge mess that's impossible to untangle. So there is a simple solution for this, the way I see it. Number one, we would have to get the short positions published once a day, because we currently have it only twice a month. And second, we would, the SEC would have to require brokers to charge an additional 1% of margin for every 1% of short interest. And that would then raise the margins progressively so high that people would stop shorting stocks.
So margin requirements would have to increase as short interest increases. That seems to be the view from you, Thomas. I'm just wondering, from your perspective, overseeing a broker, is there anything you can do to protect your clients before the SEC or the regulator has to tell you to do it?
Of course we can. That's exactly what we did. We increased our margins. So
why does the regulator need to make that decision on your behalf, Thomas? I'm just speaking out loud with you, thinking out loud, trying to work through this process with you. Why do you need the regulator to make that step?
Well, so first of all, I do not know the short interest daily, and that would be important for me to be able to know how much to increase the margins by. So the regulators could require that the short interest be reported daily. That's very simple. Secondly, the regulators tell us the minimum margin we must charge, and we are free to charge more, and that's exactly what we did. But some brokers may not know how to deal with this. That's why I think it would be good if the SEC required all brokers to charge more on shorts.
Thomas, another issue that came up as well was the conflict of interest issue as well. And I know for you that you have a different model. You're not reliant on payment for order flow in the same way.
Can we have the explosion of interest in trading with
of markets that we have?
And the commission between 0 and that for you or you? No, I don't think so. I basically would like to ask the SEC why they didn't act on the morning of January 28th, because
said we came close to breaking. What were you scared of? What did you think was going to happen?
I was scared of a domino bankruptcy. I mean, I tell you, the rules require the long brokers to go into the market and buy the shares at whatever price. So that drove the shares up to $480, and then suddenly, I guess,
including IBK, this guy pulled the buy button.
It didn't go further, but it could have gone further. So if the shorts had known, if the longs had known that they have the right.
Here it is. If the longs, meaning shareholders and owners of long call contracts, had known that they have the right
to ask for their shares.
Yeah.
That they have the right to ask for their shares.
Yeah.
And they really wanted a short squeeze, that's what they would have done.
You're not
That's what long call holders would have done if they really wanted the short squeeze, was ask for their shares, which means exercise their call contracts. Now, John here in the chat says that the strike price is adjusted for the reverse split and conversion, my friend. And I get what you're saying, man, but it clearly shows here on the documentation directly from the Options Clearing Corporation. I don't know if you just walked in, but we talked about this for like an hour already. The strike price remains unchanged. So a $90 strike call remains a $90 call after the conversion and reverse split, because they adjusted the number of shares deliverable per contract. A $10 call before the split remains a $10 call after the split, because they adjusted the number of deliverables. You can't have both. That's it. There's no other explanation here.
Testify.
And like I said,
for their share.
Ask for their shares. That's what retail would have done if they really wanted to squeeze. Would have asked to exercise their call contract.
It didn't go further, but it could have gone further. So if the shorts had known, if the longs had known that they have the right to ask for their shares,
yeah,
and they really wanted a short squeeze, that's what they would have done.
You're not testifying today. Have you spoken to them?
I think that's about enough for today. What do you guys think? I think that was really fun and informative. And we're going to find out, and I'm going to come back to you guys tomorrow or the day after as soon as I have some details from the OCC, and I will share with you here on a live stream publicly what the OCC said exactly. I did want to mention a couple things while we're on the topic. Around 50% of publicly listed U.S. companies have negative profit margins. But AMC has positive profit margins, in case you're unaware. Another major problem that we're having right now, AMC is not one of those with negative profit margins anymore. AMC is profitable. Now, another problem here is that AMC is still under corporate action on many overseas brokerage firms. The conversion and reverse split has not yet been fully completed on many overseas brokerages, and this, along with the 40 million share issuance, in my opinion, is why AMC stock is volatile. Look at what my German friend here at CNARF83 said. Nothing has changed. My German broker, Trade Republic, still shows that AMC is in a corporate action. This is unbelievable and shows that AMC is a big time bomb. We will all fly to the moon together, he says. Stay strong and hang in there. And as you can see here, I don't speak German, but he does. And I'm sure I've got a lot of European apes in here that can clearly see that this screenshot that he took yesterday, October 11th, at 2:43 a.m. Central Standard Time, says that AMC is still undergoing a corporate action. And the only reason that would be is if they have not received the AMC, if the reverse split and the conversion and the settlement shares have not been completed, and if the corporate action of issuing 40 million shares had not been completed on these brokers. So, I think that it's pretty obvious what's going on here. We'll see how things continue tomorrow. I'm looking at pre-market once again with excitement and the real action to continue in the coming days. Let's see what the Options Clearing Corporation has to say. All right, everybody, have a great night. Have a great day. It's already morning here technically, so I wish you peace and wealth. Make sure you're properly hedged and act accordingly. Cheers, motherfuckers.
We're gonna be so fucking rich.
No place like the tank.
There's no